the markets are doing, and let's take a deeper dive into what the market trend is at this point in time. Like I mentioned earlier, as well as the auto pack that is holding on to gains, while it's on the flip side, take a look at what pharma index is doing in trade today, because you have Trump that has signed an order, especially when you talk about the domestic manufacturing in the United States, and that sort of is having a ripple effect on the pharma counters back home. You have the pharma index among the top sector loser in trade today. You have the Adani counters taking a bit easy in trade today. Adani Enterprises being the top loser. Adani Ports is also a loser in trade. IndusInd Bank, Geo Financials are the other set of losers. While on the sectoral front, is PSU Bank Index down 1.8%. Realty is down 1.5% in trade today. And you have FMCG and auto are the ones that are actually holding on some sort of a shade of green. But remember, viewers, this is a show where we get answers for all of your stock related queries. You can write to us on the number that will be flashing on the top of the screen. Do remember that each time you write to us, mention your name, the stock that you're looking to invest in, mention that name as well, along with the buy price, the quantity and the time horizon. In that way, our experts will be able to help you better. Talking about our experts, today we have Kunal Bothra as well as Rajesh Agarwal, but Kunal is ready with us. And Kunal, let me actually get a sense of the markets from you, and what should one expect when you talk about the market trajectory going ahead, given the fact that after weeks of outperformance, now we think, are we actually moving into the consolidation phase?
Yeah, we are moving into that zone of consolidation, and I think we've been hovering around this 400-point band for the Nifty over the last 10 or 11 trading sessions on a trot. So that will be considered as the index consolidating. The only concern which has emerged today for the markets is the weakness which has been there across the market breadth, because generally when the markets consolidate, we actually expect that the market breadth starts to open up and perhaps they start to perform very well. But today that's the only exception as such in terms of the trends. But we're still holding on to that range. So 40-50 point down on the Nifty should not deter a short to medium term investor, and especially given the fact that we've already recovered more than 2,000 plus points in the last 1 month. So I think on the back of this, just expecting the markets to consolidate, maybe with the kind of news flow surrounding the markets, the geopolitical news flow, the global news flow surrounding the markets, that could be maybe a trigger where the markets are a tad bit more volatile, but we're still into a range when we look at this over the last 9 to 10 days.
Okay, point taken, Kunal. Markets are right now sub the 24,400 mark by a little bit. But Kunal, on that note, let's begin addressing all our viewer queries, and time for you to gear up because we have some queries coming in. Let's start by a query that's coming in on Bank of Maharashtra. This is our viewer, Mr. Venkat Rao, who's writing to us from Visakhapatnam. He's saying he's a huge fan of Kunal, something that we are used to hearing on the show, Kunal, and he holds 8,000 shares of Bank of Maharashtra at a buy price of 68 rupees per share. He's saying he's in a huge loss right now. He's asking if he should average, at what price should he average, or if he should completely exit. What's the view on Bank of Maharashtra, given that the buy price and the entry level of our viewer is at 68 rupees?
Well, first of all, thank you so much for that. Coming to the query directly, I think on Bank of Maharashtra, I would sense that you should wait on to the stock, hold on to the stock, even though the stock has corrected from your purchase price of 67, 68 to now, I think just about 50, 51 odd mark where the stock is trading right now. And there are multiple reasons for that. One, on the monthly and the quarterly charts, the stock is started to show signs of a recovery after almost 8 or 9 months of a price correction. So over the last 3 quarters prior, the stock had gone through a sharp correction from 70 levels to sub 50 mark, and this quarter is where you see the stock starting to show signs of recovery, which means that there is a higher chance that the stock may see a further up move, say over the next 2 to 3 months. The breakout point for Bank of Maharashtra is around the 56 mark, 55, 56 mark. I think that's a zone where I would believe that once the stock crosses about those levels, you can actually expect the momentum to come back again for the stock. So if you're looking to add or average, I would suggest a breakout above 55 or 56 mark for Bank of Maharashtra is where you should look to average further. Till then, you can continue to hold on.
All right, so that's the take coming in on Bank of Maharashtra. We also have Rajesh Agarwal joining us this morning. A very good morning to you, Rajesh. Thank you so much for joining us. Rajesh, let me actually get your view on the pharma space. I have, or rather, before I take pharma, let me actually take your view on CDSL. Because we have Tina, who has CDSL 100 shares at a price of 1,253 rupees per share. She wants to know whether she should stay put with CDSL or look to exit. Her holding period about 12 to 18 months. But what's your take on CDSL? Do you think it, no doubt it fell after its earnings. But should one actually move out of this counter?
Good morning, Sharon. Good morning. Good morning, Kunal. I don't think one should try to move out of this counter, because rather I would say if it falls to around maybe 1200, or by any chance, it would be a great opportunity to add. The numbers have been bad this quarter, no doubt on that. But going forward, we think the way the number of clients are being added, the kind of DP services are being added, they're into other government services also. A strong balance sheet. It's an opportunity to buy, in fact, if somebody is holding for 12 to 18 months. So it's a buy from our side.
Take coming in on CDSL. Morning, Rajesh. Welcome to the show. We'll come to you with the next query as well, since it's on the pharma space. And, Rajesh, we're hearing news flow coming in from the US, where Trump has asked the US FDA to charge more for inspection. And he's also asked them to amp up the process. This is having a lot of negative effect on our pharma index today. Nifty Pharma lower by almost 1.3%. The stock in question right now is Cipla. Our viewer Kusuma is writing to us from Pune, and she's asking about Cipla, and she also wants a technical view. So Kunal, we'll come to you for this as well. But Rajesh, first of all, what are you making on the pharma space on the back of this news flow? And then Kunal, we'll come to you for price targets on Cipla as well.
See, on the back of this news flow and the tariff tantrums which Mr. Trump has started, I think there might be some small hiccups here and there in the near future. But going forward in the long term, I think pharma is going to do well due to the fact that they have good products under their belt. Many of the companies are doing good. US FDA clearances are there, NDA filings are there. And not to forget, some of them are into CDMO, which is doing well and is going to do well in future too. We are very bullish in the CDMO space as such. As far as Cipla is concerned, it's a strong company with good product profile, good brands. They hold good market share, not only in domestic but international market also. So one should continue to hold. Maybe a target of 1,800 odd rupees in the next 1 year is quite possible. So any dip should be taken as an opportunity to add, and somebody holding tech can continue to hold.
Okay, so that's the take on Cipla. Kunal, coming to you, what's the technical take on Cipla? Our viewer has asked only for a 1 month technical view. She's asking if she can add more at the current price level. And yeah, that's about it. So what's the view coming in on Cipla? And would you recommend having a 1 month view or a slightly longer view on Cipla?
So I think if you're specifically looking out for 1 month view, I would still suggest to hold on to the stock as of now. Now today the criticality is that the stock is marginally below its 200-day moving average. It's broken below the 200 DMA for the first time, I think, in the last many days of the stock trading above those levels. So that could probably impact the short-term trend for Cipla, where the stock can probably sustain on the downside if in case the stock holds below the 200-day moving average, say for another couple of trading sessions. So as of now, hold on. But in case if over the next 1 or 2 days the stock confirms or sustains below this 200 DMA level, I think that level is around 15, 20, 25 mark for Cipla on the spot basis, then I believe that there could be a concern that the near-term trends could be a little bit more weakish. So would suggest a sell in that case.
All right, so that's the take coming in on Cipla. Welcome back. You're watching Buy Now, Sell Now on ET Now, show where we get your answers for all of your stock-related queries. Remember, viewers, you can write to us on the number flashing on the top of your screen. We have our experts who are patiently waiting by and have been answering your queries. We have Kunal Bothra on the technicals, while on the fundamentals, we have Rajesh Agarwal. Let me continue taking the query then. This one is coming in from our viewer, that is Suresh Nair. He's writing to us from Hyderabad. Wants to know about GMR Airport, 250 shares at a price of around 79 odd rupees. He is a long-term investor, is what he's mentioning actually, Rajesh. Take on this one. Do you think its fundamentals are intact, and now after sort of a glitch or a blip in between that the group faced, now the prospects are brighter for GMR Airports?
See, first thing, the entire travel and tourism space is looking very good. After the COVID, we have seen the kind of phenomenal growth in the entire sector as such, GMR being one of that. But at these valuation, I think the entire positives have been discounted, and it would be prudent to book profits around 90 odd rupees. Maybe if it falls by after that it corrects, then one can re-enter. But at this point of time, 90 would be the prudent levels to book profit.
So take coming in on GMR Airports. Kunal, let's come to you. Our viewer Kiran is writing to us and she wants to ask about 1,000 shares of Loris Labs at 640 is what they're holding in their portfolio, and also asking on 6 months view for the same, and also asking if it's a time to buy Blue Star for the next 6 to 12 months. What's your take when it comes to Loris Labs as well as Blue Star, and 6 to 12 months target price for both of them?
So Loris Labs seems to be a good buy at current levels, just around that 600 mark where the stock is trading right now. The stock is consolidating, and we've seen over the last 6 months the stock do pretty well. I think from 500 or sub 500 levels, the stock moved towards 640 odd mark in the recent rally, and then just about consolidating at the 600 levels. Of course, on the back of where the markets have gone through a mild correction. Blue Star, on the other hand, the stock has been an underperformer, and in fact, in the last three months or so, the stock has already gone through more than a 20% correction, and still trading sub its long-term moving averages. So, I think out of the two, if you ask me, I would suggest Loris could be a better buy.
Now coming right back to you, Rajiv from Mumbai has written to us. He wants to know about Bharat Electronics. He wants to know how long will the stock take to cross the 340 rupees per share mark, and can he add more at current levels, or should he wait for it to surpass the 340 and then go ahead and accumulate?
So I strongly believe that it will take a lot of time for the stock to scale past about those levels, because that generally happens. New highs for stock prices, they generally get breached or to sustain once the market sentiment starts to improve. There's so much of uncertainty around the market even so far, and that's why you're seeing that even though the indices are moving at higher levels, stocks are showing signs of a breakout. Every now and then you see these stocks just skidding and then coming back to their key support points or retracement levels. That's the sum and substance of how the market trends would probably be over the near term. Difficult to anticipate that when these kind of negativity which would come out and the markets would come back into a stable uptrend. But I think in those scenarios itself is where we expect the markets and the stocks to break past about their lifetime high levels. To the second point which you mentioned, I believe that BEL is a good buy as well as a from long-term play. And I think looking at the stock over the last 3 years, and then specifically over the last 3 months where the stock had shown signs of outperformance, I think if you're sitting in good profits, you can continue to hold on.
Okay, so continue to hold on BEL. Let's move on from that query, and Rajesh, will come to you. Our viewer is coming. A question is coming from our viewer Krish, who's writing to us, and the stock in question is Indian Hotels. Now, the stock is in focus today on the back of its earnings that we had, and they're holding Indian Hotels 150 shares at a cost price of 791 rupees. Stock at 767 thereabout right now. He's asking for your views on the long term. Is it good to average now? It's been largely inline set of numbers, but the stock has reacted very adversely to its earnings today. Tell us what's the outlook when it comes to IHCL, because the growth guidance for FY26 as well as FY30 seems to be very strong.
See, just now we were talking about the Indian travel and tourism industry, Indian hotel being the market leader in the hotel space with good amount of earnings. They have added a number of teams in the recent past, having good projects going ahead. And the best part is the brand is very strong. I mean, the kind of tourist inflow, marriage season going forward, I think the stock is going to do well. Even the numbers are pretty good. From almost 80, 90 odd rupees during COVID times to almost 800 odd rupees now, it's almost a 10 bagger. So maybe some amount of consolidation or of correction is quite possible. That cannot be denied. But for a long-term horizon, it's a very good buy. So any dip should be taken as an opportunity to add.
So that's the take coming in on Indian Hotels. Kunal, let me come to you. Sangeeta is writing to us from Pune, wants to know about Gujarat Gas. Is it the right time to go ahead and buy Gujarat Gas? And also, is it a good stock to buy, or should she look at some other stock?
No, I think it's better to look at some other stock, because Gujarat Gas, and I've been tracking these stocks, IGL, MGL. These stocks have a tendency of coming closer to their lifetime high levels or breakout points, and immediately post that we see these stocks skidding and then coming back into a sharp sudden price correction. So buying these stocks on breakouts may not be a good strategy. But if you're looking to buy the stock, then I would believe that maybe if it retraces back towards say 600 to 630 kind of a zone, which is a major support for Gujarat Gas, that could be a level where you may look to enter into the stock.
Okay, so that's the take coming in on MGL. Rajesh, we'll come to you. It's a slightly broad-based query. It's not a stock-specific query that our viewer, Ms. Reshma Bhatia, is asking. She has a query in regards to the current disturbed geopolitical scenario that we're seeing between India and Pakistan. She's asking, should this escalate and move on to the next level? Would the stock market see a correction? And at a time like this, she's asking if she should book profits and keep some cash handy. Is this a strategy that you would recommend right now?
This is a very difficult take to take because whether the war will escalate or not, it's not anybody's guess. So nobody can predict right now. We all believe that at least the war should not take place because if that takes place, obviously economy is going to take a downturn and will be pushed back to many years. So God forbid that doesn't happen would be best scenario. But let's see what happens going forward. What has happened in Pahalgam should be something should be done about that. That's a fact. Going forward, how will the market react? Obviously, if there is a full-fledged war or something of that sort, market will correct. Uh, but these things are short-term things. If you're a long-term investor, I think if the market falls due to news of war and all, one should take this opportunity to add rather than booking profit unnecessary. Unless you have a short-term view or you need your funds, no need of booking profits at that point of time. Stay put. Uh, things move on.
All right, so that's the take coming in. The stay put, given the fact that yes, we are in very uncertain times, even when you talk about geopolitical tensions as well. But yes, makes sense to stay put and hold on to your positions. Kunal, you concur with that view?
Yeah, of course, it's difficult to anticipate that what could happen, but what could happen to the markets post if in case there is such a kind of a scenario. We look at this from the statistical point of view. If the markets break below a critical support point, irrespective of the situation, or the news flow surrounding the market, that's where you have to adhere to discipline because, such news flows would keep on coming. Over the last 3-4 months, we've seen, so many news flows, whether it's global, whether it's local. So I think on the back of this, it always makes sense to go with a disciplined approach. And I think that's where the stop losses, etc., they come into play.
Okay, so that's the take coming in from Kunal on how to navigate everything that we're seeing in terms of the geopolitical development and the impact it could have on the markets. But on that note, viewers, time to slip into a very short break on this edition of Buy Now, Sell Now. Keep writing to us, and when we return from this break, we'll start addressing all your queries once again with our experts. You stay tuned and we'll be right back. Hi there, welcome back to Buy Now, Sell Now. Let's keep it going with all your queries. And once again, we have both our experts on board. We have Kunal as well as Rajesh. Rajesh, we'll come to you with this query. The stock in question is Tata Consumer. Our viewer Ignatius is writing to us from Kolkata, and he has 20 stocks of Tata Consumer bought at around 1,080 rupees per share. He has been holding for 1 year. He's asking if he can continue to hold on for another year. Tell us, what are you making of the company, and is it fundamentally worth holding for the next 1 year as well?
It's a strong company, good fundamentals, strong brands, a strong play in tea and coffee. Starbucks stores are doing well. Going forward, also we think the in this FMCG space, this stock is going to do well. But at these valuations, upsides are capped. I would say maybe maximum 1,200, 1,250 we expect in the next 6 months. So it's better to switch to maybe ITC or Americo at this point of time.
Right back to you, Rajesh. This next query that I have is coming from Ajish, and he's writing to us at Kerala, and he wants to invest a huge lump sum amount. The huge lump sum amount is about 10 lakh rupees. That he wants to invest in only one stock, and that is Adani Ports, for a period of about 10 years. Do you think it makes sense to do that and invest such a huge lump sum amount in Adani Ports for a period of 10 years, given the fact, no doubt, yes, you have your ports, your logistics, that will actually see a good uptick, given the fact that India is going to become a manufacturing hub as well. But the point being that much of an amount only on one stock makes sense, or should he diversify?
Is that for me?
Yes, for you, Rajesh.
Hello.
Yes, Rajesh, the query is for you. Given the fact he's asking for a long term, about 10 years or so, Kunal will put his hands up and say, I'm not going to talk about it.
Okay. No doubt, Adani Port is a good company doing very well with the kind of India story, growth story, economy going to 5 trillion, 10 trillion in the next 10, 20 years. It's a good story, a great logistic play, no doubt on that. But putting all your money in a single stock is a very, very risky idea, I would say. If something goes wrong, you are in a problem. Better thing to do would be at least divide your money into 4, 5 stocks, maybe in the large cap space. So at least they are stable, can give you good returns. And if one stock goes wrong, at least the other 4 or 3 would take care of that. So that would be my suggestion.
So that's the take coming in on Adani Ports, and putting so much in one basket. The view from Rajesh is divide rather in quality large cap names. But let's move on from that, and Kunal, coming to you, next stock in question is Railtel, where our viewer Radhakrishna, writing to us from Bangalore, they hold 100 shares of Railtel at a buy price of 450. The question is, should they book loss or average it a little bit? Holding time is for 1 year, and also asking for the target for 1 year. So what are you spotting on the charts when it comes to Railtel?
So definitely not an average for Railtel, even after the stock correcting from 600 levels, start of the previous year to say levels of 300 where the stock is trading right now. So even after the 50% correction, because it doesn't look like that the stock has settled into a range. The stock is going through a sideways, band as such, but then there is a chance that maybe the stock can drift lower yet again in this leg of the downtrend. So we need to see and wait for the evidences where the technical charts start to show that the stock has shown signs of bottoming out, or there is more support for the stock price. As of now, that's not to be seen in the charts for Railtel. So that's why I would suggest an avoid on averaging out at current levels.
Alright, so that's the take coming in on Railtel. Coming right back to you, Kunal, because this next query that I have is coming from Megha, who's writing us from UAE. Wants your view on Siemens India. It doesn't make sense to buy this one for short-term gains. No doubt there has been a corporate action over there. There's a corporate restructuring that has taken place in Siemens India. But what's your take on that? Barring that on the technicals, make sense?
See, I think I would suggest to wait for the stock to break past about the 3100 mark on the spot basis. That's where I would believe that there should be a breakout point for Siemens, because below these levels, the stock may continue to show signs of some uptick couple of days, but then the trend would fizzle out pretty quickly. I think 3100 plus levels is the breakout point in terms of many indicators for Siemens. So I would suggest to buy only above those levels.
Okay, so that's the take coming in on Siemens. Rajesh, we'll come back to you. Another Adani company is in question now, and this time it's Adani Enterprises. Our viewer, Mr. Swaminathan, writing to us from Bangalore, asking if it's a good time now to buy Adani Enterprises for a long-term investment. And he's asking if the copper smelting plant is ready for commercial production. If he understands correctly, this has operationalized. So on the back of this, do you believe that this is thrust enough for our viewer to invest into this company now and hold it for the medium to long term? What's your take on the Adani Enterprises?
See, strong company with good basket of business. The copper business, as the gentleman has said, has started doing well. I think one can continue to hold the stock, even buy at 2300 order levels, for a target of maybe 2800, 2900 in the next 1 year.
All right, this next one is coming in from Sangeeta. Wants to know about ABFRL, Kunal. She wants your view on this one. Her buy price is 275 rupees per share. What's your take on the charts? How is ABFRL looking?
So I think after yesterday's move, I think the stock started to look attractive in terms of the support. 250 is a decent support for ABFRL. So I would suggest if you're looking to trade, keep this as a stop loss and look out for higher targets, say closer to 275 to 280.
Okay, so those are the levels on ABFRL. But Kunal, very interesting coming in from our viewer, Mr. Ritesh, who's writing to us from Nagpur. He holds Bajaj Finance 56 shares at 8,810. He's requesting for an ultra short view. What is an ultra short view? What's the time frame? And share with us the levels that you're spotting.
I'm not sure what's the time frame for ultra short view, but I think I think stocks like Bajaj Finance, I'm not sure whether you are looking at just purely trading into the stock. If in case you are, then I think you can probably look out for maybe keeping a support or a stop loss just around the 8,700 mark on the spot levels. I think if the stock manages to break below this level and close below, you might see the stock drifting another 100, 150 odd points on the downside if it's purely a short-term kind of a trade.
Let me actually quickly just take a look at the markets and see what we're doing, because yes, on the index index or the benchmark index front, we've not seen that big a sharp fall. But if you look at the sectoral print in today's trading session, a sharp knock coming in for the PSU Bank Index. At the start of the show, it was down about 1.5% or so. Now actually PSU Bank Index is down in excess of about 2.5%. You have Realty Index has taken a knock of about 2%. You have Power also down and out in trade today. It's the broader markets that are playing spoil sport in trade today. You have the mid cap index down about 1.4%. Ditto coming in for the small cap index. And over the last few minutes or so, that fall is only accelerated when you talk about the markets. But you have Nifty Banker today that is underperforming benchmark indices once again in trade today. And the advanced decline ratio has slipped a tad bit, with Adani Group of counters being among the top losers on Nifty, IndusInd Bank, Supply, SBI, Eternal, all of them actually losing out in trade today. So yes, so we have actually seen that slip, and a sharp slip at that, over the last few minutes or so. But let me get back and let me try and address this query that is coming in from Prasad, who's writing to us from Greater Noida. Wants to know about Bandhan Bank, 215 shares at an average price of 325 rupees per share. He's been a very patient investor, Rajesh, because he's invested in the stock in the year 2008. He's asking when will his buy price actually return on Bandhan Bank? And secondly, I want to know that given the fact that he's been patient, especially during the very rough patches of Bandhan Bank, now what should he do?
See, this and RBL, these are the two banks which have been ranked underperformance since listing. If I'm not wrong, Bandhan Bank used to trade at 800, 900 odd rupees at one point of time, and it's 150, 160 at this point of time, and still no hopes that it might go to newer highs. The numbers have been pretty bad just because of MFI business, the kind of loans they have given into the Assam region, and the recovery of that is a real problem. Still, I think with the kind of banking outlet, with a large number of banking, around 900 plus, the bank has some opportunities to go ahead. Maybe a target of 180 to 190 is quite possible in the next 6 to 9 months, provided the numbers not go really bad in the next 2-3 quarters. We have a target of 180, 190, and we have recommended this to our clients.
The point being that Rajesh, for him, who's already losing out money in this one, so should he actually look to sell when the counter hits at around 180, 190, and also that if the earnings do not disappoint?
See, the earnings do not disappoint and the numbers start improving, I don't think there would be a reason to exit, because once the number starts improving with the kind of banking outlets, this is a very huge number of banking outlets. So if the numbers start improving, we can revise our targets. But at this point of time, we have a target of 180, 190. So we have to wait for numbers, let the numbers come in. If the numbers start improving, we can again replace it.
So that's all about Bandhan Bank. The numbers, once they start improving, maybe they will improve much more, and then there will maybe a revision in the target price. What's your take on the technicals, on the charts, Bandhan Bank?
Well, I think you're trading on hope, for the stock, and I think trading on hope doesn't make sense. There has to be some sort of a discipline, because even if you've bought at higher levels, there had to be a point where you would probably just about decide that the thesis of you buying the stock has failed and the stock has gone through a sharper correction, because price eventually is what matters. And that's where I would believe that on the longer term charts, even at current levels of 150, 160, there's so much of conjecture that maybe the stock would come back into a recovery, or there could be a bounce back. When we look at the charts over the last 4 to 5 years, the stock has consistently disappointed. So even if in the best cases of the banking stocks doing well, there is a phase where the stock underperforms. In the worst case, also the stock underperforms. I'm not sure whether the rationale of holding the stock makes sense for Bandhan Bank. I would suggest that it's better to try and switch to the formidable large cap names, because that's where there is a lot of safety as well as a much more higher degree of certainty, rather than living into this uncertain scenario as well as a hope trade.
Okay, so exit Bandhan Bank and switch to more marquee broader names coming in. That's what Kunal's take is on Bandhan Bank on the charts. Kunal, coming to you again. Next question coming in from our viewer Ritu, who's writing to us from Ahmedabad. Stock in question is NCC. She's asking if now would be a good time to make a fresh entry into the stock.
So I believe that buy on stages, because the stock is trying to form a bottom over here. Over the last 3 months, we've seen 175 to 225 as a range for NCC. It looks like that the stock would probably spend a couple of months over here trying to consolidate into this band, looking at the way the long-term charts are. So I believe that buying on stages could be a good strategy. You can say start buying at current levels and then wait out for a maybe a 5% kind of a dip, and that's where you can look to start accumulating further.
Right. Let me come to you, Rajesh. This one is coming in from Shrikant, writing to us from Hyderabad. He's holding Eternal, that's why known as Zomato, 2100 shares at a price of 69 rupees per share. He wants to hold it for more than 5 years. Not sure for eternally, but he wants to know whether it will also cross 1000 rupees per share mark. What's your take on Eternal as a 5-year theme or a beyond 5-year theme? Makes sense.
See, 5 years is a difficult thing to say at this point of time because if you look at numbers have been pretty bad in the last 2 quarters. Even I would say it would it was worse than their expectation, I would say. That was just because of they tried to increase their dark store from 2,000 target of dark store in 2026 to the entire store in 2025. They took a hit. Now, even the food delivery business is facing some issues. In the quick commerce business, there is a lot of competition, like by the likes of Swiggy or Amazon or other Zepto, other players also. So, onboarding is too much a real issue. The competition is very high. Margins are not there. They're still making losses. So, fundamentally, I don't find any reason to be in the stock at this point of time. So it would be a very long call whether the company would turn into profits or not. It would be the time would say only. So at this point of time, we are not bullish on this. We have a neutral rating on this.
Call coming in on Zomato. Last question, we'll try and squeeze that in quickly. Kunal, next stock in question is NMDC. Our viewer Venugopal is writing to us from Hyderabad. Holds 9,000 shares of NMDC at 67.7 rupees per share, asking if he should hold, average or sell, can afford to hold for 2 years.
I'll definitely suggest a hold on NMDC.
So whole call coming in on NMDC, but with that, viewers, we're completely timed out on this edition of Buy Now, Sell Now. Kunal, Rajesh, thanks so much for joining us. And viewers, keep writing to us because once again, we'll be addressing all your queries tomorrow at 11 a.m. But till then, it's a goodbye from me and the team that put this show together. Thanks so much for watching. Markets at Noon is up next.
If you like this video, then like, share and subscribe to ET Now.